Hi, my name's Ash Beatson, and it's a real pleasure to have the opportunity to present to you during the Successful Bookkeeper Summit. I hope you've been enjoying the summit so far and are gathering some great tips. Just before we get to the main topic, a little bit about me. I've worked within the bookkeeping, accounting space for 30 odd years, and I've worked in various business types like law firms, within a manufacturing company. I've worked in an accounting practice. I also ran my own bookkeeping practice for a number of years. Since 2014, I've been a part of the UK Trainer Writer Network for Intuit, and I've been involved with the certification program. In 2019, I helped develop a software application that integrates with QuickBooks Online, NetTracker, and that is specifically, it started off its life as a fixed asset register and has now grown to be able to do much more than that with regards to month-end adjustments and all of the type of adjustments that you need if you're creating a set of management reports. And that takes me nicely on to the topic in hand, which is all about management accounting. And we're going to look at the benefits of creating management accounts, the type of adjustments that you might need to make regularly, and I'll also put a little example together with regards to a management account pack. Now, I don't want to bore you with too many slides. I have actually prepared a fairly detailed PDF guide which you can download and take a look at that in your own time. Now, there's some primary benefits of creating management accounts specifically for a bookkeeping firm, and this could involve creating an additional value-added service which is going to increase the revenue for your firm. For your clients, they've got the benefits of having reports so they can look at their profits on a real-time basis, have regular estimates of maybe their tax liabilities, and also very early detections of some of the errors they might be creating where they're putting their bookkeeping record together incorrectly. So we'll look at a couple of those. Okay, so here I am in a US version of QuickBooks Online. It's the Plus level subscription. Now, without stating the obvious, there's a lot more to creating management accounts than purely looking at the profit and loss or the balance sheet and exporting those as PDFs or Excel. We need to do some thorough checks before we do anything else. So what I'm going to do is, just before I look at some of the errors that we have on this particular file, I'm going to come down to the bottom and I'm going to take a look at the profit and loss that we have here from February all the way through to June 2022. I'll take a little snapshot of this in a moment, but we can see that how our income is being reported every single month. So there's actually a loss in the month of June, and overall we've got 195,000. If I'm looking at the profit and loss in detail, and in particular the account for payroll expenses, I can see there could be some journal entries in there to account for payroll taxes that are payable at a later time. But what I've also spotted is that I've actually created expense entries to pay those payroll taxes instead of actually creating the entry against the balance sheet to reduce the liability. So what I'm going to do is simply use the reclassify tool to correct those entries made. So from here, just going into my accountant's tools, looking at reclassify transactions, looking for my account for payroll expenses, and then all of these entries for the payroll taxes that have been paid, I want to reclassify those to my payroll taxes account. Reclassifying those transactions would have improved the profit now by 50,000, and if I'm looking at the payroll taxes liability account in detail, that balance is down to 0 because I've paid all of the tax due. One of the basic steps that we can take before we prepare any management reports is really to check for consistency across the profit and loss. And that generally means, are the values within each category consistent within each month? Here we've got travelling expenses, which is a lot higher in February than we would expect. So we can take a look and review that to see what entries have been made. In this example, I can see that a car has actually been purchased, so that's quite simple for me to adjust that. I'm simply going to put that category to the profit and loss, from the profit and loss I should say, into the balance sheet. So I'll change that out of travelling expenses and put it to motor vehicles and save that entry. And again, that's going to improve that profit and loss now by another 35,000. Now if I'll just come back to my report summary. Now we do expect consistency usually against a lot of categories, but it's not going to be the same necessarily for all businesses because they could be seasonal. So that is something to consider when you are preparing your management reports. You really should know the business very well and be aware of perhaps any fluctuations between different seasons. It could be more busy in the summer than what it will be during the winter. Now the next thing I'm going to do is just take a look at this unpaid invoice for $43,200. Now this is a fairly old invoice and I would have expected it to have been paid by now. So the first thing I'm going to do is just a little check here for that value of $43,200. So let me just search for that. So by doing so, if I take a look down, I can see I've actually got a couple of deposits in here, and I've got my invoice of $43,000. If I look at the deposit in a little bit of detail, that's for a different business, so I can close that one down. But there is actually a deposit that's been made directly to the sales category instead of actually paying off that invoice. And this is a very common error when you're coding transactions directly from the bank feed instead of allocating them against an invoice. So what I want to do is simply correct that without actually making any changes to perhaps bank reconciliations. And this is what I'm going to do. I'll look at my invoice, which is currently sitting there as unpaid. And I'm going to receive or mark this as invoice as paid, receive payment. I'm actually going to receive payment against the undeposited funds account. So I'm going to code that to undeposited funds. And again, I'm going to date that in February. Save the transaction. Now at this stage I've still double counted my sales because I have $43,200 as an invoice and I also have $43,200 as an additional deposit. What I'm going to do is use the new button, create a bank deposit. Selecting my $43,000 to put in as a deposit, but I want to actually zero this out, contra it to a total of nil really to pay in. So I will use sales as my account category, and I can put in there adjust duplicate. And in the value, put in there minus 43,200. And the value could be different if you are needing to adjust for sales tax as an example. But in this one, I'm not using sales tax, but I am simply adjusting the value there of that invoice against sales. And I can choose to now save and close. If I take a look at the sales account in detail, I can see that that negative adjustment on the deposit is now showing in there to reverse the sales entry made. The actual value for 43,200, the invoice itself, was recorded against the annual contracts account, and that's where it sits. Okay, so far you might think that's not too difficult or exciting what we've done so far. We've just looked at some very basic adjustments, things that have been posted incorrectly, to the wrong account, duplications. Making those adjustments are going to affect our profit and loss. But this is where things get a little bit more interesting. There's a lot more to creating our management accounts than just changing the way some of our bookkeeping entries have been made. If we've got entries that have been made that reflect future events, then we may need to make some adjustments, prepay our expenses, accrue for expenses, defer income, for example. And this is where things can get a little bit more technical. So we're going to take a look at some of those options and how we can make those adjustments quickly and efficiently and be able to reconcile those entries back to the balance sheet with relative ease. Just taking a quick look at our profit and loss. After making those earlier adjustments, we've now got a profit showing $237,000, where previously this was $195,000. So an improvement so far of around $42,000. Now let's take a look at this profit and loss in a little bit more detail again. So I'm coming up to the top. I have a line in here for annual contracts. Now $118,200, that can relate to a contract that spans 12 months. What we shouldn't have here is the total value now appearing in 1 month. We need to defer that income because that can relate to a subscription that lasts for 12 months, for example. So I need to put 12 months worth of those fees in the subsequent months. That's going to affect our profit for the year to date, and it's going to affect the sales value in each of those months. So there's going to be an adjustment there to income. If I look further down a little bit here, what I've got is third-party commission costs. June includes a single supplier bill for $65,000. Now let's say that that commission actually reflects sales that were generated in those 5 months, but they've actually charged us all in June. So what we should have done really is put an accrual in for that expected commission that's now become payable. So I'm going to accrue for that expense. So what I want to do is defer the income for the $118,000 over 12 months, and I want to actually accrue for the $66,080 that we're going to pay in June. I've created a company in NetTracker and integrated that to QuickBooks Online. I'm going to make my deferred income adjustment. I'm using the deferred income group, and this is for my Hilltop Group annual contract. I'm making adjustment against my annual contracts income account. The original invoice date there was February 22, and the original value for the annual contract is $43,200. I want to start making these monthly adjustments starting at the end of February over 12 months. So all of the profit and loss and balance sheet journals that I need are going to be made for me. Just a little reminder that back in QuickBooks we've got third-party commission payments that total $66,080 in the single month of June. $65,000 worth actually relates to commission that's been earned over the last 5 months. And what I want to do is create an accrual that is going to very easily spread that $65,000 cost over the 5 months that we need it to. Back in NetTracker, I'm creating my accrued expense, and this is for the accrual for commission on sales that we're going to pay to B2B intros. I've got some extra notes in there. A large charge in June 2022 relates to contracts won over a 5-month period. I've got the profit and loss account I'm going to make the adjustments against, which is the third-party commission payments. When I received the actual invoice, which was in June 2022, the total value of that charge, $65,000. When I want to start making adjustments to the profit and loss to accrue for that charge, which is going to be in February, and over how many months? 5 months in this example. With the processing in NetTracker complete to the end of June, my fixed asset register has been updated, so I could just take a look at that. So I've got my asset purchases in the current year, my depreciation that's been calculated and posted also for the current year for each of the necessary asset groups. If I look at my deferred income groups, so I could take a look at my deferred income. I've got a couple of deferred income lines on there for 12 months for both of those particular charges, and I've released 5 months and I've got 7 months remaining. I can see what my prepayment balance is, which is my deferred income balance in this instance. That totals $68,950, and that will agree to the deferred income balance that I now have on my balance sheet. If I'm taking a look at my accruals, for example, so I'll look at my statement of accrued expenses, that particular accrual is now complete. The $65,000 has been adjusted all throughout February to the end of June with a monthly charge of $13,000 in each month. That now released that accrual fully, so the balance left in our balance sheet for accruals is nil now in this example. Okay, so let's take a look back at the profit and loss in QuickBooks after making those adjustments for the deferred income and the accruals. So if I'm looking at the income area within QuickBooks, we can see that the annual contracts values is now actually even over those following 5 months from February through to June. So if I were to look in February, for example, what we would see is that NetTracker would have created a journal to take 118,000 out and is now starting to spread that over the following 12 months. With regards our third-party commission payments, we no longer see a huge charge in June alone. A charge of $13,000 is now being made in every month. If I do look in the total for third-party commission payments, we can see the journal entries that are being created by NetTracker, so putting $13,000 in all of those months and then taking $65,000 out of June to release the accrual fully that's been made. If I look towards the bottom of my profit and loss, I've now got some figures in there for depreciation charges based on the values held in the fixed asset register in NetTracker. Now let's compare our net income figures after we've made all of those changes and adjustments to what we had originally at the start. So overall, we originally started off with a net income figure of about 195,000 and we're down to 163, so we're about $32,000 down. But the biggest differences after making those adjustments are in February and June. February, we initially had a net income figure of nearly $140,000. That is now showing as $19,000 because we've deferred the income. In June, we originally had a loss there of nearly $95,000, and that is now just over $24,000. So we've reduced that loss in that month by $71,000. So just by making some changes, some corrections, and actually spreading the costs over the correct months to which the charges relate has made a large difference into the way the figures have been reported. Now, we've really only scratched the surface there with a couple of adjustments, and the list goes on. We might need to accrue for income, and that could be like a work in progress adjustment. We might need to revalue stock. We may need to do other adjustments for provisions for bad debts, as an example. Now, all of these adjustments, when they add up, can make a huge impact to the way that a profit and loss is reporting. That could be the difference between an investor providing funds and investing into a business, a bank providing a loan or an overdraft facility. So getting these figures right is vital for some businesses, and it's important for you as a bookkeeper or an accountant to work very closely with some of your clients, really understand how their business operates on a day-to-day business, and you will be able to give them the help and guidance that they need. So now we understand how our client operates and we've made some of the adjustments required. Let's take a look at an example of preparing that management report. Back in QuickBooks, I'm in the reports area and selecting the management reports tab. You have two reports in here by default, the basic company financials and your expanded company financials. Now, what I would tend to do is just pick the basic company financials. There's not much difference between the two. The expanded one has some additional reports in there by default. There's no option just to create a new set. So what you do is you choose to create a copy of one that's already there. So I could create a copy of that basic reports, and you can see I've now got a basic financials one, which is my copy, which I can now edit and make my own. So I'd started to do that with the report I've got called Quarterly April 2022. So I'm going to choose to go back to that report and select the option to edit, and let's see what we have. So just towards the top, I can change the template name. So I changed that from my copy to my Quarterly April 2022. Towards the top right hand corner of the screen, I've got the option of changing the reporting period that I'm going to choose to report against. Now, down the left hand side are the different sections of this report pack, starting off with my cover page, so I can put the necessary information in place. I can add a logo if required. Then I'm going to move to my table of contents, which is going to be pretty much pre-populated. I can just choose whether I want to include that or not. Now, this is really the most important section for me sometimes, is your preliminary pages. So this is where you can really create your own commentary. So as the advisor, what you should be doing is looking at the reports, picking out some important points, like perhaps the gross margin, how things are comparing to prior periods. Are things looking better? Are they looking worse? Write anything that you think your clients are going to take some value from. And then following on from the commentary that you've presented and written out is going to be backed up by the reports that you're including. So you're going to have some reports added here by default, but you can choose to add your own or remove some of those. So you can see there is a little trash icon towards the right hand side there, and if you don't want that particular profit and loss in place, then you can choose to delete it and remove it. And then you can add new reports. So using the add new section, I can go to choose to add and type in the profit and loss. So even a report that you've saved, customized yourself, we can add into this pack. So I'm going to put in here my profit and loss by month that's customized. I'm also going to delete that particular balance sheet. I'll add a new balance sheet report, and I'm also going to add a budget versus actuals report that I've created in there as well. Now, when you've selected your reports, you can choose to change the order of those. So I'm simply going to go to the left hand side and move those using the grid box to drag those up and down as necessary. Now when you're happy with all the reports that you have in place, and you can add quite a few more, I'm going to go to the next section. You can add some further end notes if you wish. I don't need to add additional notes, so I'll remove that, and then we'll save that management pack as it is. Once you've saved and closed your management report pack, you can go back and edit it at any time. You can actually send it by email as a PDF document. You can export it into PDF or Word if you'd rather make some additional enhancements in a Word document that you can't do within that particular format that we have there. Now, if I do just export that as a PDF, let's take a look at how it appears. So we have a very nice reporting pack to present either to your client, to perhaps their bank, or anyone that is interested, with a cover page, a table of contents of the information within there, any notes that you've added yourself, followed by those reports. So there's my profit and loss by month. There's my profit and loss as a percentage of total income. So from that report, you've got your gross profit margin will appear within there. And then there's my budget versus actual report that I've also created. Standard balance sheet. Okay, so I do hope you found this session useful. Just a little bit of a recap here. So we've looked at the benefits of creating a management report pack, both benefits to your practice, which you can provide additional services, increase revenue and profits within your firm, and also for your clients, they should receive up-to-date management information that can help them to decide how to steer their business, essentially. And don't forget, creating invoices and just putting supplier bills on alone is not necessarily going to report the correct figures. We have looked at making different adjustments, so not just correcting errors on the way that an entry has been made, but also making further adjustments, whether that is to defer income over the appropriate months to accrue for costs. And there's lots of other adjustments that may be necessary too, depreciating your fixed assets over their useful life as an example. And then right at the end, I did put a sample management report pack together, and you can see if you're using the tools within QuickBooks Online, it's quite easy to do that, and you can get a nice, very professional looking report, which could be for your client, could be for that client's bank or investor, whoever may need to look at a management report. Now, there's also a pretty detailed guide on management reporting, which is available for you to download as a PDF. So please do take a look at that. Now, if you're looking at this recording after the summit has ended and you don't see that as a available download, then I will put it on our website, www.nett-tracker.com. So I'll make sure it's there within our help files available for you to download. This just leaves me to say thank you very much for watching. My name's been Ash Beatson. You can find me on LinkedIn, on Twitter. Please feel free to connect with me. I hope you get lots more useful information out of the rest of the Bookkeeper Summit, and hope you can make your practice grow. Thank you for watching.